Hello, hola, bonjour. Welcome back to another episode of Market Bites. It is the 21st of January, so it's our third one of the year. Hope everyone is doing well listening to this or watching this, wherever you are. A very interesting start to the week, it has to be said. So we've actually got quite a lot to discuss. The title with these things always gives it away. So initially going to focus on Netflix, and we'll talk about just the general market sentiment, because I imagine there's a lot of people out there just feeling a little bit uneasy about things. But then on the flip side, you say, well, actually, we're only a few percent away from all-time highs across most equity markets. So should be a pretty cool debate that we have today. Neja, first of all, before we get into all of that, how are you?
Hi, Sam. Well, this year already feels way longer than 3 weeks. So many things happened on the market, outside the markets, that it's way too much for just one episode of Market Bite. So I really hope that we will be able to cover at least a fraction of the things that are happening. But yeah, how are you?
Yeah, no, I'm good. It's exactly that. And it, by the way, it feels quite similar to 12 months ago, where you and Josh and I were doing the podcast, and it'd be like we usually record this on a Wednesday, and we do the episode and be like, goodness me, so much has happened in 7 days, and it feels like there's another topic to discuss, and it feels like that again. And
Yeah.
I guess just before we actually get into things, I wonder if many people do feel like that it's almost just 2025 again, where the first couple of months it's just uncertainty, and that then gives the opportunity for the rest of the year. So we can discuss that a bit. We're not joined today. People on YouTube already know this. We're not joined today by Brett. He's on a well-deserved holiday. I'm actually not sure where he is, but hopefully you're enjoying yourself, Brett, wherever you are. And we look forward to having you back on as well. It wouldn't be a Market Bites podcast if we didn't discuss the weather, Neja. Is any snow out your window, or is it gone?
No, all the snow is gone, so now it's just cold and depressing. Yeah, hopefully, UK looks a bit better.
Well, it definitely doesn't look better. It definitely looks exactly the same out my window, cold and depressing. Um, it's quite funny whenever we do a webinar on Monday for our diamond clients. I do it with Lale, our global market analyst, and one of the first questions I ask people is, look, well, one, can you hear us? Or otherwise we'd be talking to no one. But two, let me know where you're logging in from. And we just have such a diverse audience. We've got people from Dubai, Abu Dhabi, Australia, Dominican Republic, South
Wow.
Africa. And I'm just thinking, God, these people are living in such nicer places than where I am right now. So it always makes me jealous. But look, hopefully we can bring a little bit of cheer to the markets and warm your days up. However, if you're a Netflix holder, you're probably not feeling amazing right now. But and you can discuss this, Neza, the earnings on the face of it look quite good, and dare I say strong. But when the stock then falls, obviously questions need to be asked. So what matters more right now? Is it the business performance, which we just said was strong, or is it the Warner Brothers acquisition that's maybe weighing on things?
Yeah, I mean, it's much easier to binge watch Netflix right now to be a Netflix
Yes.
shareholder. But yeah, I would say that right now this acquisition clearly matters much more than the earnings themselves, because even the market reaction showed us right that, because yeah, the stock dropped after the earnings. And for everyone interested also in technical picture, I know that you just recorded Trader Talks on Netflix, so go and watch that also on our YouTube channel. Yeah, but I would say that this acquisition and story behind Netflix really showed us about how investors are thinking. Because, yeah, if we look purely at the business, I can say that Netflix is doing many things right, and I probably lots of you can agree with me, because there is revenue growth escalated, margins expanded, and cash flow improved. Advertising is scaling faster than many expected. So the company looks operationally very well, but in fact, this would be just a normal quarter without any deal in the background. I think that reaction would likely be very, very, very different. But of course, markets do not price the past, they price the future. And Warner acquisition fundamentally changes how investors have to think about Netflix future, because the deal introduces several risks, and that brings lots of uncertainty. And what do market hates? Market hates uncertainty. So first is execution risk, because Netflix historically, if we look at their business model, they've been builders, not buyers. So if the deal goes through, they have to integrate massive media business in something that is pure streaming platform, and this is something completely different for them. Then there is also financial risk, because all cash deal means higher debt, post buybacks, and less flexibility, at least for a short term. And of course, the risk that everyone is talking about is regulatory risk, because that can drag on for months and keep the stock under pressure, because we don't know if the deal will go through, will not, if it's going to be delayed, or what will happen. So even though that earnings confirmed that Netflix is running well, acquisition kind of forced investors to think different question. Not is Netflix executing well today, but what does Netflix look like in a year or 2 years, if this deal goes through, or if it will be delayed or blocked, like what's going to happen. So that's why these earnings might feel a bit disconnected from market reaction, because the market essentially saying that, yeah, the quarter was good, but this not reduce the uncertainty that now dominates this story. And at least I think so, that until there won't be more clarity about this deal, fundamentals are on a second place about that how they will matter for stock performance. And that doesn't mean that earnings don't matter. It just that means that they're not a deciding factor, I would say, right now. What are your thoughts?
Yeah, I just made a couple of notes while you were speaking there, because I think listening to all of that, and then this isn't me saying I think today's going to be the low in the market. It's not me saying that I think a week time is going to be the low in the market. But I wonder whether people that just listen to that or have looked at the report themselves are actually starting to get a little bit excited here, especially for the people that aren't in a position but are maybe looking to. Because in an ideal world, you buy a stock low and you sell it high, right?
Yeah.
So if the stock keeps coming under pressure, which it has, quite a way off its all-time high that we saw last year, it becomes a little bit more interesting. The risk reward in some cases comes a little bit better. I did a trader talks and I talked about a level that was still a little bit below where we're trading, and it would mark a 47% drop, right, from the all-time high to this level. If price goes back to all-time high, you're looking at near 100% return on that. So that interests people, I would say. It's tough though, isn't it, where the results are good, a lot of things they did well, but you've just got this thing that's hanging over the company.
Yeah.
And also what can be difficult is sometimes from a charting perspective, it could start to move higher and people buy in. And then a further headline comes out, the deal that's expected to sort of, we know more in April, gets delayed, or they've got to raise more money to get the deal over the line. They come under pressure and we go lower again. Or the opposite, the deal's great and suddenly the low's in and you've missed it. So I imagine there's people out there that are eyeing up a sort of dollar cost average approach to this, because if we were to, and maybe everyone listening to this, if you just have a little think, do you think Netflix is going to be trading higher in 5 years' time? I imagine most people are going to say yes, as they would about most of the Magnificent Seven, which are a lot of them not doing too amazing right now. Even I was looking at Tesla yesterday, and that technically doesn't look too good. But it's a very interesting company, Netflix. I was when was it? Maybe a few months ago, I was on the way to Arsenal or on the way back from Arsenal, and we were just talking about with my friend just sort of inventions and all of these kind of things and ideas we had when we were younger. And one idea I had, I was on a uni football tour to Rimini in Italy, right? And we were on a coach. We got a coach there. It was horrible, many hours in the coach. But I was on the way back, and this would have been 2011, so 15 years ago. And I said, I've got this idea where you could put glasses on or a headset and you could be in any stadium in the world and as if you're sat front row and looking at the pitch, right? That now happens. So I created that. But anyway, a friend of mine, not when we were in Rimini, but he said after a night out, him and a friend came up with the idea of Netflix. I think Blockbuster was obviously still a thing at this time. He's like, well, what about if you could have a where it's all online and all of this, and then a few years down the line, Netflix is created. But I imagine there's many people out there that have had ideas that have ended up not being taken by other people, but created by other people. I like the company measure. I mean, valuation wise, is there anything that's sort of catching your eye? I mean, just purely from a technical point of view, before you answer that, the RSI, which is a sort of a technical indicator for people that don't know, which in theory can tell if something is overbought or oversold. It's one of the most oversold it's been in a very, very long time. So there's indications technically that a low could be in soon. But valuation wise, what are you feeling?
I mean, I would say that it's very important to separate price from value because
Yes.
a stock being down doesn't automatically mean that it is cheap, and a great company does not automatically become a great investment just because chart looks ugly. But yeah, I agree with you. It hasn't been many opportunities for Netflix in the past that it would be trading that low. But I would say that there are arguments for undervaluation and not as much undervaluation at the same time. Because as I said, Netflix is still a growing business. It is growing revenue at double-digit pace. Margins are expanding faster than many large companies can manage, and free cash flow is becoming more and more consistent. So yeah, it's a great business. And also on forward earnings, Netflix is trading much closer to broader market than the most of its history. Because if we take a look back, for example, it's like many periods in the near past, investors were paying very high multiples for growth alone. And now those multiples are much lower. So if I would say that if you believe in advertising, that it will become a meaningful profit driver and that margins will keep expanding, then you can argue that market is overly focused just on near-term fear. And as you said, when you ask people if they believe that that Netflix will be trading higher in 5 years, I mean, I would also say that majority can agree that we can expect Netflix to trade much higher in the future, but we don't know when it's gonna happen and what will be driver for that. But yeah, there are also arguments why this stock might not be as cheap yet or as undervalued, because growth is slowing even though it's growing fast. And management, when you listen to them, they are openly guiding to lower consistent currency growth this year compared to the last year. So there is kind of a transition from high growth story that Netflix has been for the past years to more mature one. And mature companies usually trade at more modest multiples. So this is a new normal for them, it might be. So yeah. My honest answer is that Netflix looks more undervalued than it used to, but undervalued compared to the past is not relative to today's risks. Because there are risks that we didn't know about a year ago, and the market just doesn't like uncertainty. But in case that you think that this deal will go through someday, I think that's a very strong point for Netflix future growth. But no one happens what will happen. No one knows what will happen in between. At least.
Yeah, yeah, and I guess for those, just while you were talking there, I thought of an analogy, and I know not everyone that listens to this likes football. There might be probably the majority of people that really don't like football, but some people might be listening to this thinking, why is a company struggling to push higher based on an acquisition of Warner Brothers? You know, they're looking to buy this company. They're going to have more on their selection for people to watch. This could increase subscribers. This is great news. Well, the way I'll talk about it for those people that like their football or any sport, and I'm going to talk about Liverpool signing Alexander Isak last year. And the rumours were in the summer that they were going to spend about 130 million on this player, which is a lot of money. So that immediately creates a bit of doubt. And it hasn't turned out that this transfer has gone too well for Liverpool. So if Liverpool were a share price, their share price would be lower than where it was last summer because the deal hasn't gone too well for them. And it's almost the same from an investing point of view. It's like Netflix are buying this. It doesn't guarantee success. It might be that they've overpaid. It might be that it's been a bad use of capital allocation. So this all is in investors' minds at the moment, and you know, one of the reasons why it's struggling a little bit. And for those that are, you know, newly into Netflix from an investing standpoint, or those that have lost a little bit of money, or those that have missed out, it is worth saying that Bill Ackman, one of the, you know, we can say one of the great investors of recent time, has an awful history with buying Netflix. He bought Netflix and then sold, I think it was April 2022. If anyone's got a chart up in front of them, check April 2022, Nezha, because I think it was pretty much the low, wasn't it?
Yeah, it was. It was. I didn't know the story.
Yeah, 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 incredible.
I loved your football analogy, but of course, you're mentioning that because Arsenal. I had to take a look at that. Arsenal is on the first place in Premier League this year, and Liverpool is way behind on the fourth place. So yeah,
Yeah,
that might be a reason you're mentioning that. But yeah,
maybe.
not talk only about Netflix because there is so much happening on the market, and the sentiment is not best. We could compare it to weather.
Yes.
How do you feel about current sentiment? Because yesterday was such a rough day that I hope that many investors didn't open their trading apps because it was not maybe a best day for decisions, especially for rush ones.
Yeah, I mean, it was a day where you don't check your portfolio unless you're only long gold and silver, and then you're probably checking it every 10 minutes. It's a tough one on sentiment because, as I mentioned at the beginning of the show, we're so close to all-time highs. The S&P 500 almost trading above 7,000, and that's obviously the first time in history. Looking Europe equity markets are high. You look over the last sort of 12 months, Chinese equities are higher. It's been a great year for equity markets, great 12 months. But the S&P 500 yesterday on Tuesday suffered its biggest loss since October the 10th last year, and that was not just a tough day for stocks, but a tough day for markets, right? Crypto, I think, marked the top in and around sort of October, didn't it? And had a big sell-off on October the 10th, so that was a bad day. So there's quite a few things to consider when we talk about sentiment at the moment, and obviously one of the main reasons we've probably been lower is it all kicked off again last week about Greenland. And then when you chuck in Monday being a bank holiday in the States, MLK Day, so maybe with a new risk, people didn't necessarily want to hold risk over the weekend. That creates a bit of negative sentiment. The markets gap lower, and we finished near our lows yesterday. Had the worst days since October the 10th. So the Greenland situation's interesting. I researched into it quite a bit, and I can understand purely from a US point of view why they want it, right? Strategically, geographically, it's a great place for them, and you've got all the rare earths as well, and it would increase, you know, a lot of, you know, positive elements for the US if they were to have that. I can absolutely understand why the EU and have no interest in going into those negotiations. So that creates a bit of an issue. Then you get Trump threatening all the tariffs, and that brings up, this isn't a positive story. So it absolutely makes sense that the markets are going to be on edge about that. What typically happens with these things, as we've seen over the last year, is taco, right? Trump always chickens out. And I would imagine that's going to be the same again. I think there was a comment last night where he said, hopefully we can do something in Davos. We can sit down, we can talk and come up with some sort of deal. And I imagine they're going to. My honest view at the moment is the US aren't going to get Greenland, but they've already got a base there in all of this anyway. So I'm not quite sure why they feel like it's their divine right to have it. But it creates negative sentiment in the market. And then other reasons, other things to consider is, well, one, the Mag 7, right? You just talked about Netflix. That's under significant pressure. Tesla's down quite a bit now from its all-time high and looking bearish. And you've got basically anything other than Google is also struggling a little bit. Even Nvidia has just done nothing for a few months. So that rotation away, sometimes rotation away from the big stocks can be seen good, market breadth. And a lot of stocks at the beginning or the end of last week were above their 50-day moving average in the S&P 500. This is a good thing, the most in a very long time. So actually that maybe is more positive. But on the flip side, if everyone is selling out the Mag 7, a lot of the returns in the stock market in recent years have been because of them. So maybe that's one that's 50-50. But also people would have seen it. We've talked about it loads. Feels like pretty much every episode we mentioned gold hitting a new all-time high or silver hitting a new all-time high, and that flows into safe havens. And when we also look at bonds and equity markets, typically price-wise, they move in opposite directions, usually sort of risk on, risk off kind of play. But when they move in the same direction, so if equities go down and bond prices go down, it's more sort of like a liquidity move. So it's when you have a positive correlation, you could sort of argue people are rushing to exit positions to go into safe havens for example, or there's uncertainty in the market. So that for me is sort of signaling that there is a little bit of negative sentiment in the market. The VIX closed above 20 for the first time since November yesterday. Bitcoin was back below the 90,000s. It was down about 9% in 48 hours as well. So there just does feel like right now there's a case to be had for stocks to move a little bit lower. There'll be people listening to this that have a bit in cash that are like, I am so up for that. And it reminds me of last year where it was like we do an episode and every 7 days and there's a new headline to talk about. Midterms for Trump. He's going to do what he can to appease the voters that he thinks are going to get his party over the line there. So I don't think those headlines are done. I think it's going to be a very choppy market. And also we're in earnings season now, aren't we, as well? Some companies have been good, some have been bad. You see what happened with Netflix. The labor market is not amazing in the US. Rate cuts are actually on hold, so a little bit of uncertainty there as well. You've got the Japanese government bond situation as well. It seems like it's out of control. All of these things, and obviously we mentioned the EU and US tariffs, it builds up a negative cocktail in the short term. A lot of those things can change very quickly, though, which is why I don't think it's going to be a sell-off for like the whole year, for example. What's your view? Anything you sort of picked up on what I said there that you agree with, disagree with?
Yeah, I agree with that point that this start of the year reminds me very well of the last year. So I would say that we could almost feel that 2025 is repeating itself, not with situation itself, but anyway, those headlines are moving the market up and down every day. And I think that what we learned from last year, it's something that we should not be focused just on a short term and this short term volatility, but keep our mind somewhere a bit further away in the future, because all of those headlines are moving the market, but they are essentially not making nothing major changes for the companies themselves, because even those tariffs last year we saw how the situation resolved eventually, and yes, currently it's not the best situation, but I think that eventually it will get better. So I like to think about that when I see such a bad day on the market. And there is also one positive side, I would say, because you mentioned how equities were not performing well, but there is one index that is performing well year to date, and that is Russell 2000. And Even in one of our last episodes last year, we mentioned our bold statements, and one of Brad's statements was that small caps are going to outperform the SP 500, and so far he was right.
Yes.
If like I checked an hour ago, but I already forgot. Russell 2000 is up about 5% this year, and both Nasdaq and SP 500 are year to date in negative. So far he was right, and maybe we just see this transition to the other companies as well, and not market is not focused just on those magnificent 7 companies anymore. But anyway, we are just at the beginning of earnings season, and I think that all of the reports and their future guidance of all companies, especially the big ones, can make a major shifts on the market.
Yeah, for sure. For sure. Listen, there'll probably be something we talk about next week, which we don't know about right now. I think that's just the way it is at the moment. And I think people will be, long-term investors, I think, will still be happy. I mean, last year was a great year. Let's not forget that. There were some really, really good opportunities to get in the market. Those April lows, timing it to the T is always going to be tough, but it gave you great opportunities. Safe havens, anyone that was in gold and silvers had a great year. We even had a bit of a mood lower in October, and it gave you the last push for equities and stocks as well. So I think a lot of people had a great year. That, if the market does move lower in quarter 1, it gives people the opportunity. I think people will be okay with that. But we will review all of that and more next week. Neja, as always, thank you very much for joining.
Thank you, Sam.
Take care.